In this video, we wanted to talk to you about the recent turmoil in the US Treasuries market. Let's start with the intensification of the turmoil in the US Treasuries market. The US Treasury market has faced significant pressure with the 10-year yield jumping to 4.51% before settling at 4.38 and the 30-year yield momentarily rising to above 5%. The movement in the yields has prompted global governments' borrowing costs to escalate, notably in the UK and in Japan. How much of this is an effect of the tariffs? Now, the recent imposition of the tariffs has contributed to a loss of investor confidence in the stability and the safe haven status of US Treasuries. The administration's trade policies have triggered widespread market volatility with effects felt across the stock and the bond markets, which typically move inversely. This brings us to the hedge fund activities. Now, hedge funds have played a central role in the sell-off by reducing risk and unwinding popular trades, including the basis trade. These trades exploit the price differentials between the treasuries and the related futures or interest rate swaps. As these funds scale back, they contribute to the heightened selling pressure on the market. This brings us to the weakness that we are seeing in the auctions. Now, recent auctions for the US Treasuries have seen alarmingly weak demand. For instance, the $58 billion auction for the 3-year notes attracted the weakest interest since 2023, with banks absorbing a significant portion of the offerings. This has cast a shadow over the upcoming Treasury auctions and fueled concerns about the foreign investors pulling back. And this brings us to the market speculation and the reactions. Now, the speculation is raised that the countries like China might be liquidating their Treasury holdings as a form of retaliation in the trade war, adding to the upward pressure on the yields. The scenario is exacerbating the market's volatility and leading to fears that the Federal Reserve might need to intervene to stabilize the conditions, reminiscent of the actions taken during 2008 financial crisis and the pandemic's onset in March 2020. Finally, what are the long-term concerns out here? The escalating yields and the ongoing sell-off has sparked discussions about the stability of US as a borrowing nation and the long-term implications of the high debt levels amidst the challenging economic policies. This situation highlights the broader fears about the health of the global financial system and the potential for a more severe liquidity crisis if the conditions do not stabilize. Now, this is what we wanted to share with you with respect to the US Treasuries market. This is in continuation to what we discussed with you in our yesterday's video about the stock market and how the global world market and the global financial markets are behaving at this point of time. Hope you're finding this series informative and it's helping you understand as to what is happening in the global financial